All right. The last, especially the end of this week, saw some extraordinary financial developments, and we thought this was a very good time to bring in David Cross and get his read on what he is seeing. So, Mr. Cross, thank you so much for making time to join us today.
My pleasure, guys. Welcome to the Pink Palace, as they call it.
Full studio.
Wow. Wow, and your sound is great today too. Wonderful. Well,
Excellent.
we're pleased to have you. I don't know where to start, so I'm going to let you figure out how to take us through what you've seen in these last couple of days or few days.
My pleasure. If you would, Bill, bring up the slides. I'm at a very heavily regulated business, and so the first thing we have is the disclaimers. Nothing that I'm going to talk about today is advice for your particular situation. If you need advice, reach out to your financial advisor or reach out to us. But we're gonna hop right into this. Go to the next slide here, and you know what? We have had some unprecedented moves in the stock market this year. Back in late March and early and part of April, we came down 20% when President Trump said, "Hey, this whole tariff thing, we're going to take it to the mat." And the stock market said, "Oh my gosh, I can't stand this." It dropped 20%, and then he later, came out and he didn't quite say "just kidding," but it might as well have been the same because the stock market shot straight up as if it had never been said, and we literally had the fastest 20% recovery in the history of the stock market. So we got some interesting things going on. But what happened this past Friday is we had the worst single day percentage drop since April of this year. I think it's one of the largest wealth destructions in the history of the stock market. I think it's like the fifth largest one in history, and it's only because we're so big right now.
Mm-hmm.
Anyway, the Dow Jones came down 2%, the S&P dropped to almost 3%, the Nasdaq came down 3.5%, and the semiconductor index came down about 6.5%. What's really interesting is that gold and silver held up on Friday, and for anybody who's been kind of out of the loop, gold I think is up something like 55% this year. I'm pretty sure silver is roughly in the same area, and gold right now is hovering around $4,000 an ounce, and silver touched 50, and right now the December contract is around $47.25. So gold and silver holding up well. Cryptocurrency came down a little bit. Stocks kind of came down, and the whole reason why this is happening is on the next slide. It's because President Trump came out and said, "Hey, China, we're going to hit you, with 100% tariff starting on November 1st."
Can I
So
ask a question
that's
for
what
you?
precipitated this.
Can I ask one question for clarity before we move on, David, please? So you're quoting December gold and December silver. These are forward-looking numbers, yes? Could you just explain why you're using Decembers?
So here's the thing. If you look on some of the websites that are out there, like AppMex, and like JM Bullion and that kind of thing, they're quoting the spot market, which is what is silver trading for like right now across the counter. Like if you walk into a jewelry store, into a coin dealer, into a bullion dealer, that's what it's selling for like right this hot second. I just happen to keep up with what are the contracts for December delivery trading at. It's just what I kind of keep, what I keep track of.
I see. So it's it's sort of an expectation by the market as to what the price is likely to be at that time. Yeah.
Yeah. So for anybody, if you own a silver mine or a gold mine, you can't get the gold out of the mine like today and sell it today. You're going to have to sell it, in a forward contract that maybe has delivery sometime in December. So this is what that price reflects.
Okay.
All right. So there's the cause right there. The president said, "Hey, we're going to bring on some massive new, import tariffs of 100% effective November 1st." And from where we're at right now, the stock market declined quite a bit because people are really concerned about this. If on Monday the president comes out, or Scott Bessent, Secretary Treasurer, the Treasury Secretary, goes to the president and says, "Friday was terrible," and we have to like levitate the stock market, then there's a chance that they come out, next week and say, "Hey, that 100%, tariff we talked about, that maybe we're going to ease off of that a little bit." And if that happens, then we probably see stocks, rebound back higher. If they stick to their guns, we probably head lower because we've got this government shutdown going on, and what that causes is that causes a contraction in the economy. The other thing that's happening is, stocks right now, there's a lot of overvalued stocks right now, particularly in the technology area, and they were kind of due for a little bit of a pullback. So you get a lot of these, confluences of events that kind of, come together all at the same time, and then you get what happened on Friday.
So, David, I think that was the largest crypto sell-off liquidation event in history, like Thursday,
Yeah.
Friday. I mean,
I think the decline that happened on Friday, if I'm going from memory here, I think it was like a $2 trillion liquidation that happened in crypto.
Yeah.
And in the stock market, I think it was closer to like 3 or 3.5. I mean, it was quite a lot.
Yeah.
I've gotten to the point now where I've really kind of become numb to what those nominal numbers mean, and I look simply at percentages.
Of course. Okay, just curious.
Sure. Next slide there, Bill. So right now, market breadth is poor. And breadth just means if you have 500 stocks that are out there and you only have 10 of them that are going up and the other 490 are either staying flat or going down, that's poor breadth. And what this chart indicates is that we have declining breadth, where it just means that, fewer stocks are going up, more stocks are, either staying the same or going down. So that's one of the measurement tools that we look at right now. And then the next slide shows volatility. So this is really interesting. So I have a client that passed away several years ago, and very wealthy guy. And he used to tell me, David, when the VIX is low, which is what the volatility index is, when the volatility is low, it's time to go. When the volatility is high, it's time to buy. And right now, volatility, as of last week was at the lowest that I recall in a couple decades. So it was approaching, that number way down there at the bottom is 10, and that tiny little point that pops up on the screen down there, we had a 20% rise in volatility on Friday. So if we get more of this, then it means stock prices probably head lower.
That's interesting because that is because markets have been going straight up, essentially, right? That's why the volatility is at zero.
Yeah,
way low.
It's down, and it's also because there are investment contracts out there that people can buy that are they're called structured notes. And when they construct these things, they are literally selling volatility. And when they sell volatility, it forces the price down. And when you get too much of that going on, it's just like anything else. If you have too many of these contracts that are produced, you eventually get to the point where the market can't soak it all up. And just get totally saturated.
Big
Next
margins
slide.
in those structured notes. Go ahead.
Yeah, there are huge margins. So I mean, if you happen to have an investment account at one of the large firms that's out there, it's one of the strange things that I saw when I used to work for one of the big name companies. I don't want to mention them because I don't want to get sued. Is that you would buy this instrument that would say, oh, you're going to get like 100% of the upside of the S&P up to a cap of like 12%, right? And then if the S&P goes down, you participate to the first 10% to the downside, and then anything beyond that, you participate zero. And that sounds wonderful, but the problem is that if you get into a pickle and you need to get your hands on that money, those instruments are typically not particularly liquid. And if you do want to sell them, you end up taking a huge haircut or a discount. You don't get the value that's showing on your investment account at the time. You might take a discount of like 10 or 20% depending upon who's willing to buy.
Yeah, it's you can just put the note together yourself, buy the underlying and buy the option yourself.
You can, but there's people like you and me that understand those kinds of things. But the average person that's out there, they're literally just following the advice of their financial advisor. And here's the thing: most financial advisors, I think, are good people. The issue is that there's not a lot of them that spend a huge amount of time trying to understand how the mechanics of the engine work.
And they may not have the tools to exercise the engine. Yeah. So
correct. All right, so the S&P is still near all-time highs. We're still within 3% of the all-time high. I wish I could zoom in on that far side. Maybe Bill can. I don't know. But anyway,
I can't do it on the fly, David. I'm sorry. I can
that,
for our recording. I can put it in later if you want to refer to it, and I will modify it and put in an extra slide that people can see.
that's okay. The concept with this slide is that you see the stock market. The S&P is moving up, and I have some short-term oscillators on the top which are in red. There's a middle space there that's white, and then the longer term oscillators are blue. So we have a very patriotic looking red, white, and blue pattern that's going on here. What we don't want to see is the opposite of that, which is blue, white, and red. If blue, white, and red is happening, it means that the stock market's headed down. You're probably in a protracted downtrend. And the precursor to that is what we saw on Friday, where the gray line that's on there represents the current price, and it's diving into the blue area. So this is just a tool that that we found useful over time to understand kind of like what's happening with the pulse of the market. We're still near all-time highs, and again, remember, if the president comes out and says, "Hey, we were just kidding about those 100% tariffs," then there's no reason to believe. There's no reason not to believe that we could just see like a recovery right back up. I mean, that's kind of what we've seen so far this year. Again, I'm not predicting anything. I'm just telling you that we're dealing with volatility right now, and a lot of it has to do with what's going on in Washington.
Okay, it's interesting. You should bring that up, David, because this is not meant to surprise anybody. And it may not be exactly what you're referring to, but the president within the last couple hours did issue something that may have perhaps a little bearing on some of this. Let's take a look. So he brought out this at 12:43 p.m. today. Don't worry about China. It will all be fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China not hurt it. President DJT. So that doesn't exactly say we're backing off the tariffs, and it doesn't exactly have any implication for any movement, but perhaps we could characterize this as somewhat supportive, perhaps. I don't know. What do you think, given what you had mentioned earlier?
This is the equivalent of just kidding. This is, to me, this is kind of, now I wouldn't be surprised if we levitate, on Monday.
Well, crypto's already up like 3%. I was just looking. So
yeah.
I mean, so the president's got quite a few friends, that have made a lot of money on Wall Street. And so you just never know. I mean, maybe he gets a knock on the door, gets a telephone call.
I think that's exactly what's happening. I think he's very responsive to criticism and input from the right people. And obviously that happened. So I just want him to get the same input on the war, but I'll
so one of the things I really want to check into is I believe we're at a point right now. I'm going to have to double check the statistics, but I believe 22 of the 50 states in the United States of America right now are in recession. If that's the case, that's not a good situation.
Mm-hmm.
You had one more chart, by the way, to bring up that I jumped over. Let me.
This is just dollar. So far this year, the dollar is down about 10%, roughly from its high point up there. That's good if you're a small manufacturer here in the U.S. Like if you're a Georgia business and you sell things overseas, well, now your stuff is 10% cheaper to people that are buying it in Europe. So if a European buyer is looking at your product versus a Chinese product and they're in the same ballpark, they're probably going to choose the U.S. made product because we have higher quality standards and better materials.
That's for sure.
That's
a lot better quality. Yeah.
All right. Here's where the sentiment is right now. So sentiment is declining rapidly. This is the CNN, fear and greed index, and I know we all hate CNN, but this particular tool is pretty good. Right now, it's flashing caution. And we went from just barely above greed about 2 weeks ago to where we are right now at the low end of fear and maybe going into extreme fear. So right now, the market's just kind of walking on eggshells. And it means that we should have caution. You need to have caution when things are experiencing extreme greed. And you also need to have caution when we're at this fear level, because you could see fear develop into panic. And if panic happens, then we could potentially flush lower.
All the more reason we needed you on today, David. Thank you.
Listen, I'm happy to help. If anybody out there needs a second opinion on your situation, reach out and call me. Or if you haven't looked at your investment statements in a little while, call your own advisor and find out what's going on.
So, David, we're in a situation where I think a lot of people have made a lot of money. And I found that's when you really need advice versus when you're, when it's easy to, like, when the market's got killed and you're going to buy. But right now, there's a lot of risk. And that's when the advisors make their money. So, talk about how you would walk through that with somebody, please.
Yeah. So for us, everything begins with understanding where you are now, where you need to be in the future. And our job is to kind of plot the course, using a financial planning model to help make sure that you can, retire. You can hopefully meet your objectives without running out of money before you run out of life, because that would be really terrible. So our job is to help you figure that out. So we're going to look at your investment, your investment portfolio, your overall plan, and figure out, are you on track to get there? And then the next thing we do is we're trying to plot the course to get there with as little volatility as possible.
Well, you learn on Wall Street that the first thing to do in making money is not to lose any. And so you may have people that have made a lot of money look good. And I would like to say to our audience, now's the time to give David a call to make sure you meet your goals, but reduce your risk. I mean, that's really important in my opinion.
Absolutely. We're happy to help anybody that's out there. We are proud patriots, and we love working with folks that share conservative viewpoint.
And we've had a lot of really good feedback on David for our audience. So we highly recommend. So thank you for coming on, David.
Thank you. Appreciate it, guys.
All right. Any other thoughts as we go forward? We're in the October time frame, and I know that some people begin to have certain things that they begin to look at, and I don't want to delve into something that's not appropriate to talk about, but are there things that, again, might cause people to say, maybe it is a good time to, do a little bit more research as to my position and so forth in terms of getting set up for the end of the year?
Yeah, so I mean, we actually begin doing a lot of tax planning right now, and we like to harvest any kind of losses that we might have to offset gains. We've been very blessed by having pretty sizable gains, and we don't have a lot of losses to offset it. So that's a tough situation to be in, where if you're concerned the market's going to come down, then you end up having to sell some things that have got some capital gains to them. But sometimes, particularly with some of our clients that are charitably inclined, we might suggest that you make some donations of highly appreciated securities to your favorite charities, and that makes it so you don't have to pay the capital gains, or you don't have to sell something, pay the capital gains, pay the taxes, and it's a more efficient way to handle things. So we try to be as tax sensitive as possible with our investment management.
Oh, that's great. That's great.